Good morning, it's Friday the 26th of January here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Apple is forced to overhaul its App Store and iPhone features to appease the European Union.
The US widens its lead over China as the world's biggest economy.
And tracking a boycott movement, we have a special report on the major brands being affected by the ongoing war between Israel and Hamas.
Let's start with a roundup of our top stories.
Apple has announced a major overhaul of its mobile operating system, web browser and App Store offerings in the European Union, beginning in March. As part of the new approach, the firm is ditching commission rates of up to 30% for app developers and subscriptions, with most set to pay 10% after their first year. The changes are only in the EU, but the shift could hurt Apple's services revenue, a growth area for the company that accounts for 20% of sales now. Bloomberg's Charlie Pellet has more.
Apple says the revamp will allow customers to download software from outside the App Store for the first time. They'll also be able to use alternative payment systems and more easily choose a new default web browser, addressing two frequent complaints of developers and lawmakers. The sweeping changes will come in March and are a direct response to the EU's new Digital Markets Act, which imposes rigid restrictions on the largest tech firms and boosts the EU Commission's powers as the region's antitrust enforcer. In New York, Charlie Pellet, Bloomberg Radio.
The United States has pulled further ahead of China as the world's biggest economy. US GDP rose by 6.3% in nominal terms last year, outpacing China's 4.6% gain. While some of the outperformance reflected America's elevated price increases, it also underscores that the US economy is emerging from the pandemic in a better place than China's. Bloomberg's global economics reporter Enda Curran says Beijing needs to take action sooner rather than later if they want to regain market confidence.
You hear positive sound bites coming out, whether it's from Chinese authorities or from regulators, and yet the delivery is very slow. And they really need to get on with it. This rescue package that has been hinted at earlier this week, if they don't come up with it quickly, investors again will lose faith. They'll think that there's really no meat to this at all, and they'll just go back to looking at the fundamentals. The big picture fundamentals on the Chinese economy are not that great. And when you see better opportunities elsewhere, of course, the money will stay away.
The US economic outperformance is reflected in the country's stock markets too. US shares have hit all-time highs this week, while Chinese equities are mired in a $6 trillion plus bear market rout.
Shares in Intel tumbled by more than 10% yesterday after a bleak forecast. The technology company's sales and profit projection for the first 3 months of the year came in well below analysts' expectations. Intel's outlook suggests there's still a way to go in restoring the corporation's once dominant data centre business, while the firm's personal computer business is recovering, weakening demand for data centre chips and components for self-driving cars that have hampered progress.
LVMH is proving resilient despite a luxury slowdown. Sales at the French conglomerate rose at the end of last year, boosting revenue by 9%. The group's CFO said that business is now normalising after a pandemic boom, adding that the company is leaving the COVID period with favourable growth. Chairman and CEO Bernard Arnault announced that his sons, Alexandre and Frederic, will join two of his other children on LVMH's board.
The European Central Bank kept borrowing costs on hold as expected, but markets read President Christine Lagarde's muted affirmation of a summer rate cut as a sign earlier moves are very much in play. Here is the ECB President answering Bloomberg's question about the rate path at the press conference.
The consensus around the table of the Governing Council was that it was premature to discuss rate cuts. And in addition to that, I typically stand by my comments. So the comments I made to your television channel, Bloomberg, I certainly stand by them.
In that Bloomberg interview last week, Lagarde also said that traders were hindering the fight against inflation with excessive bets on rate cuts. Traders now expect a 90% chance of a reduction in April and over 140 basis points of easing across the whole of this year.
The UK has paused trade deal talks with Canada. Britain is Canada's third largest single country trading partner with a relationship worth more than $25 billion. Bloomberg's James Wilcock has the story.
It all started so well.
It's been a hard-fought thing. This is just I think, to an FTA that we're going to continue to work on in the course of the next year. But I guess what it means is British consumers will have greater quantities of maple syrup and dairy products and goodness knows what.
Boris Johnson there on a lockdown Zoom call back in 2020, signing a deal to cement trade with Canada for 3 years while they negotiate a free trade deal. The 3 years are up. The pair are now back to trading with tariffs. That laugh you heard was Canada's Trade Minister Mary Ng. She told reporters this morning she was disappointed. It's the latest in a string of stalled negotiations for Britain after talked-up deals with India and the US have failed to materialise. In London, James Woolcock, Bloomberg Radio.
Bank of America is splitting a pool of some $800 million in stock rewards, with about 97% of its global workforce eligible. According to an internal memo from CEO Brian Moynihan, the incentive will go to workers who are earning as much as $500,000 a year. It's on top of regular compensation in order to retain employees. The move comes as Wall Street firms are trying to hold on to their best talent while keeping a lid on costs that already force them to trim staff or freeze hiring. Now, in a moment, we'll get more on the changes that Apple's making to its App Store and operating system, and bring you our reporting on how boycott movements linked to the Israel-Hamas war are affecting businesses in the Middle East. But first, another story that caught our eye this morning about some top changes at JP Morgan.
Yeah, so this is JP Morgan Chase shuffling its top people, perhaps laying the groundwork for a diamond succession, of course. So interesting, the names, Jen Pipesack and Troy Rohrbach will lead an expanded commercial and investment bank. There's another woman, though, who's going to be in sole charge of the consumer and community bank. That's Marianne Lake. Daniel Pinto, of course, who spoke to Bloomberg really recently, the sole head of corporate investment banking since 2014. He's going to get a bigger, sort of broader role as president. So you can see that, JP Morgan Chase perhaps trying to give those individuals more experience. Diamond's 67. He's about halfway through that extra 5 years that he's given to the bank.
5 more years, as he always says every time someone asks about what he might do next. But look, it's interesting because, of course, anyone who does take over from eventually is going to have very big shoes to fill in that bank. So this moving around of some of his top lieutenants, as it's being referred to in our reporting, is an interesting move to watch this morning.
Now, Apple customers in Europe will be able to download software from outside the App Store for the first time from March as the company tries to placate European Union regulators and the new EU Digital Markets Act. Joining us now is Bloomberg's chief correspondent, Mark Gurman, up late in Los Angeles to speak to us here on Bloomberg Radio. Mark, thanks so much for your time.
It's my absolute pleasure to join and talk about the Digital Markets Act in the EU and these big iPhone changes. So thank you for having me.
Yeah, absolutely. What are the changes exactly? It's quite complicated in terms of the detail.
So I would say these changes are historic. For the first time, Apple is going to allow users, and again, this is EU specific, to install third-party app stores. So you'll be able to install maybe an app store from Epic Games, maybe from Microsoft, maybe from Meta, replace the app store from Apple on the phone, and install applications via those third-party programs. So that's the biggest change. Other changes here are third-party tap-to-pay apps. As you probably know, on the iPhone, the only way that you tap to pay is via the Apple Wallet app and Apple Pay. Now you'll be able to see third parties, perhaps like PayPal or JP Morgan, create competitors to that. There will be new all-in-one streaming services for gaming and the ability to replace more of your default apps on the iPhone. So these are some pretty big and extremely positive, I think, changes for consumers and developers.
Positive for consumers and developers. What does it mean for Apple?
It means a lot for Apple. So I'm still trying to figure out if this is going to hurt Apple from a revenue standpoint or benefit Apple. Some of the new fees that they're putting in place here, charging €0.50 to developers per installation, over 1 million installations in a 12-month period, that can add up very quickly and make Apple a lot of money. So I certainly think that they're trying to protect the revenue here with some of these changes. I think for Apple, though, it's basically a net neutral. They're making positive changes for consumers. Still, they're fighting them in court. I think they'll probably be pretty even on the money standpoint.
Oh, that's really interesting. In terms of it also, the EU perspective, everybody's coming out with their view, aren't they? It's a big test of EU power, as you say.
Well, I'll tell you this for EU power. They got the biggest, most powerful and arguably arrogant company in the world to make massive changes to their crown jewel, right? So I'd say this is a case study for the amount of power that the EU has, and I don't think I've seen a government be able to enact changes like this in any other major technology company to this scale before. You're talking hundreds of millions of users that are going to be impacted here across countries in the EU, from France to Germany to Belgium, etc.
This news coming as somewhat of a surprise to investors. You've been reporting on some of Apple's other recent struggles, from things like supply chains, the self-driving car changes, the Apple Watch feature that's been the subject of another antitrust case as well. This is, I suppose, an indication of how difficult it is for Apple to hold on to that top position that it holds in these sectors.
Yeah, Apple is taking it from a few angles right now. I think the other significant thing going on from a litigation and antitrust standpoint is certainly the Apple Watch missing the blood oxygen feature now in the United States. So the EU has a lot of power, but clearly the US and the International Trade Commission has a lot of power too. This is a US thing only, so maybe listeners in Europe are not as familiar, but for instance, the Apple Watch Series 6 and later has this application. You click the button, and in 15 seconds, it'll tell you your blood oxygen saturation. That's the number that most doctors think users should come in between 95% and 100%, depending on their age, condition, altitude, etc. And it's a feature that powers parts of sleep tracking and other health applications. And now, because of patent litigation, it's not allowed in the US. So if you've bought a new Apple Watch in the last week or so in the US, it's not going to include that feature. So that was a pretty dramatic turn of events for Apple on a really important product, actually.
Yeah, absolutely. Sort of part of some of the struggles that Apple has faced. Mark, thank you so much for being with us and for explaining what Apple customers and the changes in Europe are going to mean. That is Bloomberg's chief technology correspondent, chief correspondent Mark Gurman, up late for us in LA.
Well, to a story from the Middle East next, and some of the consequences of the Israel-Hamas war on the business world. Shoppers in parts of the Middle East are shunning foreign brands amid anger over US and European government policies supporting Israel. Bloomberg has been tracking the extent and effect of these changing consumer habits across the region. Our reporters Salma El-Wardani in Cairo and Lean Al-Rashdan in Dubai have been telling us about what they found out.
The key movement to be aware of here is the Palestinian-led boycott, divestment, sanctions. It's an almost 2-decade-old movement that protests international support for Israel's actions in Palestinian territories and advocates applying pressure on Israel to comply with international law through targeting certain businesses and institutions accused of supporting Israel. So we've been seeing this ever since October 7. The companies that have been hit the most, one of them is McDonald's. Calls to boycott McDonald's happened after images circulated of McDonald's branches in Israel handing meals to Israeli soldiers. Starbucks entered a lawsuit against the Starbucks Workers United after they made a statement in solidarity with Palestine. We have Coca-Cola and Pepsi. They both have some involvement with manufacturing in Israel. So really, these companies that are being accused of supporting violations against Palestinian rights, they're being hit.
Yeah, and of course these companies have responded to some of these claims, talking about disinformation and inaccurate reports regarding their position. In the case of McDonald's, for example, they're saying that the corporation is not funding or supporting any governments involved in the conflict. Starbucks also issuing a statement saying they have no political agenda and they don't use their profits to fund any government or military operations anywhere. So the companies have been responding to this. But what do we know about how businesses are being affected by these boycott calls?
So from eyewitnesses and our reporters across several Middle Eastern countries, we're seeing branches all over these fast food chains and these cafes being almost empty, deserted. Supermarkets and restaurants are no longer carrying Coca-Cola or Pepsi brand, fizzy drinks or really any item that falls within that company. And in recent weeks, the McDonald's CEO warned that his firm is seeing meaningful business impact. And we've also seen that shares of Americana Restaurants International, the Middle East franchise operator for KFC, Pizza Hut, Krispy Kreme, and Hardee's, they've declined significantly since mid-October, and a lot of analysts are saying that the hit to profits is from the boycotts.
Okay, and of course we'll get more information from these companies. We're expecting it in their next set of earnings results as well. Salma, you've been speaking to some consumers who've changed their spending habits as a result of these campaigns. Let's listen to part of one of your conversations with Sara El Masri, who works as a project manager in a cultural organisation in Egypt.
بصي أنا ليه شايفة إن المقاطعة مهمة.
Look, here's why I think boycotting is important. Because largely we're helpless. We're their closest neighbour and we are supposed to be doing more, but we can't. We are restricted by decisions governments are taking. So I believe that boycotting is the only weapon of the people. It's the only thing people have control of.
So that's Sara El Masri there speaking to Salma El Wadani. Salma, how widespread are opinions like these in Egypt and across the Middle East?
A lot of people like Sara are turning to local alternatives since the beginning of the war in protest against Western government support for Israel. You can see the evidence in the streets of Cairo, for example, where the once very, very popular global fast food chains and shops are largely empty. Pro-Palestinian sentiment has traditionally been strong in Egypt, Jordan, Kuwait, and a lot of countries in the Middle East. And since October, boycott calls have circulated on social media, listing dozens of companies and products, prompting shoppers to shift to local alternatives. And I think the point that Sara is making here is very important and is being shared by a lot of people here, is that in this region, where there's a little chance of people to take to the streets because of the security restrictions, the boycott can be the best or even the only way to make their voices heard. And like she said, the only thing that you can't control is where I put my money. Some of the people I interviewed were also saying that joining the boycott made them more conscious of their power as consumers. So the supermarket trips are now less about grabbing the favorite or even the cheapest product. It's more about the values behind it. Consumers are becoming more mindful and conscious of the human cost of their consumption and are demanding greater transparency and are expecting a specific set of standards and ethics from the brands they buy.
That's really interesting to put it in that context for us. Another part, Salma, of this story are the companies who've been benefiting from the boycotts of other brands. You've been speaking to some of them, including a soda maker in Egypt that's seen a big boost in their sales. What have they told you?
Yes, definitely the past 3 months have witnessed the rise of local brands. Social media users and influencers have been using the platforms to advocate and review local products instead of Western ones, including food, clothes, skincare. One of the companies is Pierce Patis. It's an old Egyptian company that used to have popularity 100 years ago and used to take pride as the first made in Egypt soda, but then was overtaken by the rise of global Western brands over the decades. Now it's the opposite. Since October, people took to social media to promote for it and look for it everywhere. The company was bombarded with calls from customers making orders, and that's because consumers are going to restaurants and supermarkets asking for Spiro or any other local soda maker. And the company was saying that their sales have more than tripled because of that. And there's so many stories like that of Spears Pats.
So that was Bloomberg's Salma El Wadani reporting from Cairo, and before her you heard Lina Al-Rashdan discussing their reporting on the boycott movements across the Middle East. A couple of interesting points in this, and this story, by the way, there's plenty more detail on it on the terminal and on Bloomberg.com if you want to read it as well. It's this idea of the places that, and this is something that both of the reporters that I spoke to and our other colleagues across the region have talked about as well, is the places that are empty, that you would normally see these big, particularly American brands, the likes of Starbucks or KFC, as we heard there. Those outlets are much quieter and have been much quieter, and that's been one of the ways. And I think that speaks to the point that Salma made, is, you know, whereas people feel very limited in their ability to protest in some of these countries, this is a way that people are able to express their opinions, without necessarily putting themselves at risk.
Yeah, I think, to my mind, in terms of investors, this speaks to the complexity, the difficulties of investing in ESG, environmental, social and governance. That there are different parameters in different parts of the world about what that might mean. And, for example, looking at the data only today on the terminal, there's a piece about how actually ESG funds have seen a big net global outflow. There's been a sort of turning away, certainly in the US a little bit in the last 3 months. US investors have turned away from that. So, I mean, overall ESG funds have gone up in the last year. But I think that's sort of one of the issues, you know, when you're thinking about investing.
Yeah, and look, this is something that we will be looking out for details of in the reports from some of these big consumer-facing companies that operate in the Middle East as well, because what we have at the moment is tracked via moves on the stock market and individual stories that we've heard from franchisee holders and others in the region as well. So we'll be interested to follow how exactly this will play out in those global earnings we'll get from those companies in the coming weeks as well. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.